Welcome to the Dr. DeFi show. It's a pleasure to have you, and we look forward to providing you with some updates on the current state of the market, from Bitcoin through the alts, why the market is where it is and doing what it's doing, and hopefully make some sense of why it's doing what it's doing. With that being said, my name's Dr. Scott Herman. I would appreciate if you hit the like and share button and keep my channel up on the up and up so I can help to update you on technical advancements in AI, DeFi, Web3, and crypto. It's a broad market. There's a lot happening every day, and we'll try to dig in and make some sense of it. So my sense of the sentiment of the market currently is people are scratching their heads and going, "What's happening? Why is this happening?" I put my money into alts, thinking the alt season was here, and my portfolio is dropping, going down. So let me share my screen here, and let's dig into this a little bit deeper. So that being said, let's move on to this screen here. And I'm sure you've seen this screen here before, but let me move my pointer. My pointer has this green dot around it to highlight it to hopefully allow your eye to catch it to see where I'm pointing once we get into further into the show here. So that being said, so then in the past, the normal market cycle, the coins are heavily into Bitcoin as Bitcoin rises, and as the market evolves, the money flow, as you can see on the right here and left, tends to flow as the market turns and evolves into Ethereum, and then into the large cap alts, and then into the smaller cap alts. That's the normal and typical. That's what's occurred in the past, primarily, and that's not necessarily happening this year, or I should say this year and in this cycle thus far. So let's take a look at what's happening, and of course our ground base here is Bitcoin. So this is just kind of a quick overview of where we are right now at 95,770. This was from a chart from yesterday, I believe. Yes. So of course it's been updated since then, but this is just a general guideline of where we at. Here you see the 2016 halving, the 2020 halving, and then the 2024 halving, and what's occurred since then. So that as the premise, let's move on here to the next screenshot, which is moving into Bitcoin dominance. This is not a chart of Bitcoin, which is why I just showed you the last one per se, but this is the Bitcoin dominance chart, which is Bitcoin in relation to the alts, which all the other crypto are alts. And to make some sense of this, as you can see, when the Bitcoin dominance turns and the market cycle, and as in the first slide, this one here, starts turning into the Ethereum and the alts, then we start seeing this happening, or the red, or the market, the Bitcoin dominance dropping as the alts begin to rise. So the money flow has gone out of Bitcoin here and here, and then it goes into the alts. Well, this is explaining exactly why that hasn't happened, is because in this cycle thus far, as far back as in 2022, near the third quarter, the fourth last quarter of 2023 to the present, it's just been Bitcoin dominance rising. And here we see where, quote unquote, the Bitcoin dominance dropped and baked out and rose back again to where we are right now. And that being said, this caused a lot of liquidity. There was a lot of shorts and then a lot of longs that got liquidated because of how fast this occurred and the anomaly that occurred when it happened. So this here is telling me that this is not normal and that the market currently is being manipulated. That's exactly what this is saying. It didn't drop like this, all this red, when everybody thought it was going to, and everybody put their money into, into the altcoins, feeling like because this said that it was going to do that, and this obviously said it was going to do that, as well as this back here in the end of the cycle of the 2016 halving. So that said, I do want to highlight this pin bar, which is basically a long tail, as you see on that green bar right there. That is a very, very long green tail where the body dropped down. So what that is saying is it's a point of exhaustion, and it's highlighting that, and it's telling us that something is going to occur because of how drastic that drop is from the high where it was at to where it closed. In fact, was left quite the tail in the candle there. And when you look back at other big long candles like that, you see them at the top when the market flipped, and reverse course. You see a big tail. You see a big tail. You see a big tail right there. That red. Same thing right here. This green and the red, and this green right here. So this, to me, since we are supposed to be in the altcoin season already, I'm highlighting this and stating that we should be seeing a turnover based upon the length of that pin bar candle, as that candle is called. So let's move on to the next. And this is a liquidation map showing Bitcoin. And what this is since the blockchain is transparent, and you can, and the levels are, the markets are transparent, you can see where people have placed their transactions in the market. So this is on the left side is from 0 to 60 million. So the yellow, the darkest yellow, is where the most of the money is, and you can see that there is a considerable amount at this level up here, above where the market cycle is, and this is posted this is from the 1st of February. So this is from a week ago. And it doesn't matter. I'm not trying to make the point of it being current. It's current enough for what I'm showing. And it's showing that there's quite a conviction or a bunch of quite a amount of money in below the cycle or the current level and above the current level. So that being said, that was a week ago. Now let's move on to the next slide here. And we see what happened with that this is from the 8th, which is yesterday. So we see that there was a bit of a spike where it ran up, and you see how this is blacked out because all of this was liquidated. All of this money that was placed in the market on futures, on the longs and the shorts, was taken by this occurrence happening. And you see when it rises so quickly, it drops so quickly that all of this money gets liquidated. So that's what I wanted to point out here, is that this market, by doing these big occurrences like this, tend to grab the money. And you can see that here where it's dark again because all of this money was liquidated. Yep. And in short squeezes, long squeezes, whatever they are, it's taking all of that money, and the market makers are smiling, and the retail or the normal customer is not a happy camper. So when we are in a market where we are having range bound, meaning within this cycle, staying within this cycle, and you have these quick turnarounds like this, all of this money that when it is bet on futures and perpetuals gets liquidated, meaning gone, and it's not in your pocket, it's in their pocket. So I'm saying be very, very careful, because the short-term market is not complying with the historical happenings. However, the long-term, I feel, is. So follow me as we go through the rest of this presentation here. So that being said, this is others, which is the altcoins minus the top 10. So the bigger market caps, Bitcoin, Ethereum, XRP, Solana, etc., the top 10 are excluded from this. So this is what we consider others, which is what is considered the altcoins. And I drew in some lines here showing this that this is in a we'll call it in a flag here, a descending flag or bull flag, bear flag, whatever you want to call this. I'm calling this a bear flag because of the way that it looks. And that being said, we've been stuck in this range here, so it's not trending, it's just going sideways, and it's looking like it's coming to a point or a peak or an end. And that's, again, referring back to that pin bar that I talked about, as well as the state of the market cycle as I showed earlier. So that being said, I wanted to point out that this is pending and looking and appearing like it's coming to a point or coming to an end, ending point, and that something is going to happen. Whether that goes up or down, in the altcoin season, this would rise dramatically, which has not occurred yet, obviously. So this, again, we want to see, this is the Dixie, which is the US dollar. And again, this is range bound. This is needs to be dropping the dollar. As the dollar drops, then the money goes into riskier markets, which is crypto. As this shows historically, as the Dixie goes down here and down here in the previous 4-year cycles of the halving. So that said, it looks like, it appears that this has slightly turned here and is possibly going to be dropping, which is what is normal in the cycle of the 4-year crypto cycle. So looking more specifically at Bitcoin and Ethereum by quarters, we know that the year ended and January just posted. So looking at Bitcoin here, and if we look at 2020 for Bitcoin only, Bitcoin had a significant Q4 at the end of the halving year of quarter for the year of 2020. So you look 4 years later, 2024, and it's basically only a quarter, a little over a quarter of what it was there. Go back 4 years earlier, and it's more like 2016 cycle of the 58% compared to the 47%. So this to me says that this cycle, with as far as what Bitcoin is doing, is more like the 2016 than it is the 2020 comparatively. So let's move through this before we make a specific correlation here. So as far as Ethereum goes, looking at 2024 back to 2020, again, it's only a quarter of what it was in 2020 as far as the quarterly returns in the market. 2016 we really can't correlate because of Bitcoin only entering the market in 2015. Now a whole lot was going on then, and so the correlation, it really does not make any sense. Now by month, when we look at Bitcoin, we just had January close, and so let's go back to December in comparison with 2020. It was very much different, as you see the 47% to the minus 3% difference, and then going back to 2016 it was 30%, and comparison to minus 2.85. So the monthly difference of December versus the quarterly is significantly different by comparison. You see it's basically a 4x difference here, from the minus 2 to the 46, and then back to 2016 it was 30%, so those two were more semblance of order. So in January, this 10% going back to 2021 is the 9% is in comparison to the 14% versus the minus 0.04% of 2017. So we see that there is a difference with the Bitcoin in comparison to the previous cycles. And we also see here, same thing with Ethereum being at basically minus 10%, and then comparison to 2020 where it was 20%. So there's a 30% difference there. And then again, we can't compare per se with the 2016. So January being closed now with the minus 1.28 comparison to 2021, where it was 78.51. Significant difference there. And then back to 2017 where it was 32%. So bottom line is we are not seeing a very good correlation. And we will tie this up at the in the summary of today's presentation. So let's just keep that in mind as to the differences of what's transpired. Looking at Banter Bubbles here with the altcoins, this is the top 100 just for the daily, and all you see a week ago was red, and then yesterday again pretty much the same thing. The altcoins are just in red. Which is indicative of the Bitcoin dominance, again, remaining high, that huge pin bar that we see there, and the altcoins here, which is the others we talked about earlier. Again, this is what's happened since the last slide I showed earlier, and this slide is from yesterday. So this is saying that it dropped out. It was quote unquote supposed to go up for the altcoins and the Bitcoin dominance to drop and turn around, and it did the total opposite. So again, this is making my point that number one, this market is being manipulated. Once the institutional money came in, it changed the prospectus, and that's why when we look at the normal monthly charts and quarterlies that we just reviewed, there's not much of a correlation that we can make. It's just not showing up. We're seeing such significant differences between the historical and the current that you are seeing what's happened, and this, by this occurring, is the altcoins where, quote unquote, a lot of us revolved our money into the altcoin season from stable coins or whatever you use to put your money in, DCA, whatever. And we're seeing basically it's a 30% drop in the altcoins that are supposed to be going up, and everybody is down basically 30% because the short-term market is not doing historically what it did. And that's what I'm pointing out and showing you on these charts and on these graphs why, in my opinion, that's occurred. And we will look at this next chart here on the ALTS. Sorry, I have so many tabs open. It's taking my computer a while to pull all this information up. Bear with me here. Sorry, this is taking a bit here. Well, let's see what we can. Let's come back to that. So let's move on. into some of the macro here and what's going on with that. Again, my computer's dragging, sorry. Let's see if I can brush this. Here we go. Great shot of Mr. T. So yeah, President Trump coming out with his tariffs and causing the markets to shift and do all kinds of things that markets do when big changes occur. And certainly with what's transpiring here, there's a lot of significant and huge changes in the markets because of the macro and the Trump tariffs. For example, the DeepSeek that we saw with AI in China caused a $600 billion drop in NVIDIA in one day. Just huge, significant changes in the macro that are, affecting the markets. And Bitcoin being as volatile, or I should say crypto, being as volatile as it is responding accordingly. So we have to understand that it is a volatile market, and not financial advice, but certainly be aware of the current macro and the conditions and what's transpiring. So that being said, on a more positive note, this is from Brad Garlinghouse with XRP Ripple, making a statement on X that there was some criticism of the press conference that just transpired a couple days ago, where we had the chair of the Senate Banking Committee, the chair of the House Financial Services, the chair of the Senate Agriculture Committee, the chair of the House Agriculture Committee, joined the crypto czar to commit to passing legislation for crypto clarity is 100% and a big deal, and something that we haven't seen before. And that David Sachs, who's the crypto czar, stated that he was honored to appear with Senator Tim Scott, Representative French Hill, John Boozman, and the banking GOP to discuss how the Trump administration and Congress will work together to support digital assets as President Trump directed in his week one executive orders. So big deals. That is, significant changes. Macro, the paradigm shifts that are occurring is leading to a tipping point, in my opinion, in what's going on. And as we work our way through this and seeing the sovereign wealth fund being discussed and possibly implemented, or a crypto stockpile, as President Trump has called what he's doing, because he does not have the power to create make Bitcoin a part of the Federal Reserve as a Federal Reserve asset in and of itself, without going through the normal legislative process involving Congress, etc. So that said, again, I'm having some troubles with the computer here. Let me refresh this page again. There we go. So this is a big deal that kind of may be surprising to some people, but is significant in the accountability for the new FASB accounting factors for as far as businesses and their accounting. In the past, with the crypto chokehold, banks were required to account for crypto. This is still continuing. Computer troubles, sorry folks. Share my screen. Okay, sorry about that. I hope we're still recording and all is well. And this is live, so it is what it is. I'm doing my best to fight through this resistance, folks. So anyway, back to the matter at hand. So anyway, these new financial accounting rules now allow for Bitcoin to be accounted for at its current levels, meaning that the current fair value of the Bitcoin is how it gets accounted for. So things are coming up to speed and being adapted and changed and brought up to the current market level for accounting and being accurate and in being inclusive of the tax liabilities, which is something that companies are going to need to be going through. So that said, there is a lot of regulation changes that are going on, and markets don't like indecisiveness. They like balance and symmetry, and they like to have the time to include what's on the coming forecast, so that they can weigh those in and put those in place, so there's not such large upheavals in the market. And with Trump coming out with the tariffs, even though he said he was going to do that, it came rather quickly and kind of took the markets by storm. And so let me see if I can pull this one up. This is one of my last. Oh, good. Okay, here again is another big change that is occurring. And this is the upcoming Treasury auctions that just were announced 3 days ago on the 6th. And the issue date is a week from then, which is the 13th. So what this is $241 billion that the Treasury is printing. Yes, indeed. So behind the scenes, not a lot of people know about this. It was announced, but again, this is transpiring as we speak and getting ready for issuance a week from now with $241 billion. Now, this has to be taken into context with the all of the discussions as far as the sovereign wealth fund and funding that with Bitcoin, and not the government not selling the acquired Bitcoin from things like FTX or the Silk Road or wherever they're, the SEC under Gary Gensler was finding all of these companies building the Fed stockpile, and what's going to become of that government held money and Bitcoin, and putting it in a sovereign wealth fund, a strategic reserve fund, stockpile, all of that transpiring because of hopefully to help to be used for the national debt. That being said, there's also the discussions around debasement of the US dollar, which with inflation caused the reduction of the value of the US dollar, which therefore diminishes, quote unquote, the federal debt in a roundabout way. And so there's a lot of diplomacy and a lot of politics that's going on with some big upheavals and some big changes. And all of that in the macro needs to be taken into consideration. I don't want to blow this out of proportion and make this sound like, Chicken Little or the world's ending, or the exact opposite, that things are going to be taken care of on the right path with all of these significant pro-crypto changes that are occurring, and all of these pro-crypto people taking prominent positions within the legislative and executive branches. But it does make a difference, and that's why we need to be aware of this and stay on top of this, so that we can see what's happening. So that being said, trying to boil this down into something that, let me change my screen here. Take a broader view of this. There. You don't need to see the exact details of this, just an overview. But I boiled this down into trying to make some sense of what's happening and why I feel it's happening the way that it's happening. So I put these blue lines in here, which are the dates of the Bitcoin halvings, and onto the Bitcoin chart. This is a weekly chart, and this is inclusive back to 2015 up to the current present 2025. So if you put the three latest halvings in here, so this line in the middle here, and then I also put on here when the Bitcoin and the Ethereum ETFs were put into position. So let's look at this a little bit closer, and you see the distance between the date of the Bitcoin halving and when Bitcoin spiked was quite a bit of time that occurred in the 2016 cycle here. this happened at the end of 2017 and into the beginning of 2018. And this date was in July of 2016, the halving. So basically a year and a half occurred between the halving and when the spike in Bitcoin occurred. So then we move on to the 2020, which the halving was in May, and then we see the beginning of the Bitcoin spike in November. So near the end of 2020 and the beginning of 2021, and then that lasts for, basically about a year. So we're ending in November of 21, and it started in November of 20. So this occurred from the bottom to the peak over a year's period of time. And it also occurred within a relatively soon after the date of the actual halving, which was in May. And so from May to October, November is when it started. So now, if we look here, the halving didn't occur until here, but we already see that Bitcoin had rose. Well, what happened? Why was the rise occurring? It was the Bitcoin ETF and the institutional money coming in, preparing for that, and then the announcement and etc. So we had all of this occur, and then the ETF announcement, the ETH ETF announcement, and that occurred. So this halving that in the middle that you see is, in effect, this rise here is quote unquote the result of the Bitcoin halving, which is what we see in these other two. So if you look, the semblance of trying to correlate these is a mismatch. And in my opinion, too many people look left on the chart and try to make a correlation as to what's happened, and that it mimics history or it rhymes. It's never an exact duplicate. And I'm saying that is an error that is being made, and it's costing people a lot of money, including myself. We're trying to correlate things that do not correlate. This had, one small rise. It was a big rise in percentage because of where it was at. So don't get me wrong. I'm not trying to minimize. I'm just saying there's one. Now we're getting two humps. So in this one, we should be getting three humps because this is the third big one. Who's to say? Also, that this was, institutional money coming in. You can see how significant this is, because if we say that this rise here is more determined from the Bitcoin halving, and that this was because of the ETF, which brought in significant billions of dollars of institutional money. So what I'm saying is be careful what you ask for, folks. Now that we have the institutional money, now that we have more players, now that we have companies that are, and countries that are buying, purchasing, having more say-so because of the way that the blockchain works and it was designed to work, etc., that that the markets are being adjusted by the people that are in them accordingly. So when we heard or saw or thought that the alt season was here, coming, being prominent, should be happening, etc., and people put their money in altcoins for them to rise because they rise in percentage much more so than Bitcoin or Ether, the higher market caps of the alts, that that did not happen because the people that are, and they are holding, and I showed you by the Bitcoin dominance that Bitcoin is still top dog. The dominance has not rolled over yet, and altcoin season has not started yet, quote unquote, as it has in the past. And so the people that want to buy Bitcoin are holding Bitcoin from rising up into the 130s, 140s, and beyond, so they can purchase it at the level that it's at, which is why it's going sideways and not going up, and the dominance not going down, and the Dixie not going down, and the others going down instead of going up. All those charts that I showed you explaining why this is happening. Now that said, let me continue with my thesis on Bitcoin here. Is if you follow this line, which looks like it makes sense, this pink line of the trend line here. So we have the peaks here, here, and here. Well, if we continue with that and we go, remember I told you that it peaked in November here, and this one also in November, where it started, it ended, you know, the peak again here. Sorry, it was a little difficult. Anyway, let me move on. So this cycle is quote unquote supposed to go into November. So let me put this is at the end of November of 2025. And if I put this here and go across to the Bitcoin, let me just get a trend line here. So if I go to November 25, I wanted to do this live so that you could see this. If this peaks, we'll say right there. So that is 123. So if you follow it just a little bit further, if it's right adjusted, you know, so be it. But anyway, my point is that we're at going to be in the range between 120 and 130,000 is what this chart tells me as far as where, if this does indeed come to form a third step up, and it ends in November, like this cycle ended in November, then this tells me that this should end between the 125 or 120 to 130 range. So I don't see, according to this, that it's going to go phenomenal and go nuts unless the wannabes want that to occur and make that occur. And that said, that I'm also making the point that you do not want to rely on the historical perspective as much as you maybe have if you are not on the bright side of what's occurring right now. And that you go at a very slow pace. Those, even the experts that I follow that have been forecasting the short term in this market, where I see one of them, on the his profile of his transactions that he shows, lost $500,000. Another gentleman lost over $1 million, and I don't know the exact amount of, but it was in the millions. And these are quote unquote the experts that have thousands and thousands, tens of hundreds of thousands of followers that are missing the mark here on the short term. The short term is not playing out according to the way that it had in the past, and it is being adjusted by those who can, in my opinion. And so go slowly, don't use leverage unless you really, really have a conviction and know what you're doing. And walk softly and carry a big stick, I guess, is a good way of ending this. I don't want to belabor this point, but I wanted the culmination of this to be simple and be able to be viewed on a simple chart and try to make sense of what's happening and where things are going. And for the people that are scratching their heads and saying this is not what I had anticipated, I'll just again end this by saying simply that the long term, in my opinion, is playing out. I have not sold. When you sell, that's when you lose, and that's what is being liquidated. That's what's being manipulated. The Bitcoin being held where it is still the dominant in the market right now, and the altcoins are suffering because of that. So the market makers are achieving their goal of being able to buy more Bitcoin at a quote unquote reasonable rate before it jumps, and also being able to keep the retail out of the market by liquidating them and having them walk away and allowing the altcoins to drop, which is retail getting out. But you only lose if you sell. So if you're just holding it on paper, you have not lost yet, because in my opinion, it is still going to happen. And by the looks of what I pointed out earlier, with the culmination of the pin bars on the Bitcoin dominance and the culmination of the altcoins and where Bitcoin dominance is in the Dixie, we're still looking positive, we're still looking forward, and we're still moving forward. So with that said, I hope that you got enough out of this and this presentation, and share this podcast with your friends if you so choose. Hit the like and subscribe button, and we will look forward to another day. Bye for now, folks.